Hey there, subscribers. So, big down day today. The biggest day we've seen really for months, if not more than half a year. I haven't seen 1,000 point down day since really we had the October and December crash kind of time back here. And so, what does that tell us? Well, if you've been following along with my videos, I put out a trade idea a couple videos ago about shorting the market, the triple Qs, right up in here, and I said, this is a good short opportunity. I was looking for a little more proof, but we got that proof intraday on that day, and I actually did get short. However, unfortunately, I didn't catch this big down day today short. And that's because we were at support on Friday. So we closed right at support, and markets basically what they do, usually they'll close right at support to keep you guessing, and then they don't give you an opportunity to get a nice objective short, and they also don't give you an opportunity to get out if you're long. So that's why we get this big gap down today. It traps the longs. And it also denies the shorts an area to actually get in. So I'm actually long the triple Qs right now. I got long today, really as just a bottom, kind of a kickback move. But basically, we're undercutting this resistance, and what I'm looking for is a pop back to this 2470, 2466. You can see that's basically this gap right here. You've got this little gap, and I'm just looking for a pop back to fill this gap. I think it's going to happen today. I'm not going to take any longs home overnight. Too much risk of another gap down, and I actually might reverse short. Well, we just have to see how the day plays out. But as of right now, I'm looking for a day trade to the upside, and I actually already caught it once this morning, so now to catch it again, it might not be there. I'm watching it pretty closely, but the stock market did play out exactly like I said in my video yesterday. So if you want to kind of understand how I read the charts, and how the videos that I'm putting out is typically anticipating the move that's coming, then go back and watch the last video. And you'll notice that in my last video, I said, okay, we're going to gap down big tomorrow, and most likely right at the open, we're going to see a buy the dip kind of relief rally. And that's exactly what we got. The low of the day actually so far today has been the open. We opened lower and it ramped right up. Didn't quite get to this 2470. We got really close, but I did get long on that move for a day trade and sold that position. And then it has since tapered off and come back down, and ultimately we're kind of just flagging right here. So keep stay on point. This is not by far over, and I think the downside is the next big move for the markets. I think that we're actually going to start entering a bear market, and let me show you why I say that. Even though the market's been extremely resilient, I put out a video saying I think this is the top. Go back and watch that video. I mean, I basically called the top almost perfect, and as of right now at least. Let's look at the SPY here, and let's just look at the weekly chart. The pink purplish line right here is your decade long bull market. Okay, here's your 2009 lows, and here's your trend. You can see it's held the trend. We broke the trend right here, and we've been back testing. So when we back test, all you do is, you're still underneath resistance. So there's only so far you can go before you run smack into resistance, and then you fail usually. And that's exactly what happened here. We overshot resistance right there. We overshot it just slightly, and the very next week instantly sold off, recovered back below resistance, followed by confirming, a strong confirming candle so far this week. So that tells me that, and especially on this weekly chart, if this week closes, anywhere down near, I don't think it's going to close this low. I think we're going to have some sort of a little kickback rally, some sort of a relief rally. The buy the dip crew will show up, especially on the first drop like this and how resilient the market's been. I think they're salivating an opportunity to buy the dip because it's worked every single time. So Why would this time be any different? But the reason why I think this time's different on the at least for the last year and a half is because we ran right into this resistance line of this decade-long support line, and we're instantly rejected and impulsively. So that is why I think that the top is in for the stock market, and we're actually going to start to work our way lower over time with the swing trade. And so we can look at longer term targets. If we go to we'll stay on the SPY. You've got this range down here. Everybody sees it. It's right down in here. Here's your range right in here. So I think we're heading down there. That's where I'd say this bear market is going to take us. Could take us a lot farther depending on what actually plays out. But I think we're going to head down to this 212 or 187, or either fall short or undercut or overcut. And I know that's a big range. We're just going to leave it at that for now because we got a long ways to go. So it's not too important to worry about it, but just keep it up there, and we can kind of watch that as the price action trades out. So going back to the Qs, which is the preferred index that I like to trade, huge down day today, biggest down day I've seen in quite a while. This is a real dagger through the heart of the bulls. All the gains for 2020 have been given up, and and this uptrend has been broken. So this is a sell signal right here. However, it doesn't give you a great entry, and that's the thing that that I don't like about entering right here. I'd prefer to have a kickback rally up close to this trend line right here, and then establish a short there. They're probably not going to give you that opportunity, though. You might have to, if you want to get short this market, I suspect we're going to have some sort of relief rally. Maybe we get up to this 224.70 and that's where it fails. And maybe it already did that. This candle right here on the hourly, you can see we got really close. And maybe that's all there is, and she's going to sell off more. Sorry, I keep flipping over to my trading platform to see what's going on because it's a big day. There's opportunity. What am I looking at besides that? Well, the point is the uptrend right here. Nice clean uptrend. It's now broken. And when you break these uptrends, you might do a little kickback rally and then fail, or you might just roll over and fail. So we could easily have another gap down tomorrow and then have a relief rally. We just don't know what's going to happen. All I know is the chart tells me that the market is going lower. The SPY tells me we're going lower. Whether we go up a little bit from here and then make our way lower, I can't call that. I don't know that. But the probability tells me that eventually we'll work our way lower. And, that's really what that tells me there. Let's look at Apple. I mean, all the FANGs have broken their support. Here's Apple. It broke its support. Now, the days, we still got a couple hours, so if they try to ramp it up and close right at support, that'd be pretty bullish. I mean, that would say that this was a bear trap, kind of a false breakdown, and we're going to hold support. So let's keep an eye on that. We want to see, you got to see how the market closes to give you an idea of where it might head in the next few days to weeks, especially on a big breakdown day like today. KHC here. At support, let me see here, almost at support. Here's your support right here at 25.85. You could move that up slightly, maybe at 20. Let's call it $30. Let's call it $26. So 50 cents shy of support there. Yeah. So that's really it. On the markets, we have a breakdown. Most likely going to get a kickback rally. And then continue to make our way lower. That's the way I read it. Let's look at gold here. Move my charts over. Okay, so here's gold bullion. Moved higher. We've since given some of that back. And, this might be kind of a short-term top for gold. Pretty impulsive move higher. I mean, you can see this thing's just about gone parabolic. And that might be a short-term top. It's hard to say, but I mean, I wouldn't want to be buying or going long gold up here after this big move. I'd look for some sort of a pullback. Maybe you fill the gap right here at 1647, and then maybe you could look to cycle back in. Here's Barrick Gold. this thing has pretty much gone parabolic as well. Here you go right here. I actually sold my position today. Maybe I'm a little too early. It's hard to say. Gold can completely run, and the miners can run just vertical, which is basically what they've been doing. I mean, since they broke out right here, the thing's up roughly 20% in, about 7 trading days. So it's a pretty big move in Barrick Gold. And my red line right here is resistance, 2273. I get that from this little gap we had right here. And that's actually the level that I said, if we break above that level, if we are able to break above that and hold that, you've got kind of some dead space where, 2778 is really the next level of resistance. So if we, we see, it goes back to kind of this trading range right here. So that's something to watch. If we sell off right here, then this was kind of the blow off top. We should pull back a little bit, or we potentially hold above 2273. And then if we do that on a daily close, then we're probably going to see 2750 or so in pretty short order. I guess the point I want to make is we've had some big moves already. Now's not necessarily the time to get FOMO and think that you're able to jump onto a trade that you probably should have jumped on anticipated this move. If you follow the move, you almost always end up losing money. And that's why you basically want to look for the move before it happens. And so all the people that, put out comments on my videos about, stocks are going higher and this and that, well, they usually only do that when, our gold's going lower. I get a lot of, I get some of that. They say that stuff usually only when the market is uptrending and they continue to feel good like this. Up in here, market's going to all-time highs. Everybody thinks it's going to continue forever. And most people don't know how to really read a chart to anticipate the next move. They only know how to read the chart with the move that's actually happening at that point in time. And the way to make money in the stock market usually is to anticipate the next move. Yes, you can write a trend, but typically trends end with such a lopsided trend as well. They end with a sharp reversal and everybody trying to rush for the exits all at once, which means you give up all those profits quickly. So I typically look for the major moves and then anticipate when that's going to happen. And the major move on this SPY tells me that we're done with this rally. We're now heading into a bear market. And I'm getting confirmation on a lot of charts that tells me, the uptrend's over. And that's why, I get short up here. Most everybody else thinks that the market's going to continue running, and they don't see the signs. But again, now's not the time necessarily. We're way oversold. Look, 15 on the RSI, extremely oversold. We're just undercutting support slightly. This could be a stop rate. I could easily see this ramping up into the close and then having a kickback rally. Maybe we fill the gap up here to 229.30. It's hard to say. So ultimately, I'll be looking to recycle back into some short positions on a gap fill, but I don't want to do it right here necessarily unless I get some other signs throughout the day that tells me it's safe to establish a brand new short. So long story short, I took some profits, had a really, really good week last week, really good start of the week this week. So got to take some profits as you go. And then we're looking for the next opportunity or signs that this move is going to continue and when. I think that the S&P 500 is going to enter into a bear market, and I do think that there is an opportunity to establish a good size swing short. If you already have a short from up here and you caught the breakdown today, then you could just hold that short, and maybe, we get a little kickback rally, but I think the bigger picture is we're going to get more downside. So that's one way to play it. If you're looking to establish a short, I would wait for some sort of a kickback rally. And we might not get it. We might gap down again tomorrow. So that's just the risk of the game. You could keep your position small or try to, manage your risk with a smaller position if you want to take a short here. But usually you like to get short, up ahead of the move, and when we overshot the trend line up here, and then I saw it instantly reject right here, that was the best area to get short, was right there. That's kind of that. So anyways, I'm gonna let the video go. Everyone, let me know what you guys think, and I'll talk to you guys later. Bye.